I was locked up for the first 3 months of the pandemic with my son Andrew, and one of his expressions, which caught on with me, he said that readily available quantitative information with regard to the present cannot hold the answer to get rich, right? And this is kind of the efficient market hypothesis. Everybody has this information. Back 60 years ago, 70 years ago, Buffett talks about buying dollars for 50 cents because not many people had the information. Today, everybody has the information. When I started as an analyst, every company had somebody called the analyst contact, whose job it was to deal with the analysts like me from the street. But since I came from Citibank, which was a prestigious organization, what some of them did is they put the budget for the next year on the desk and went to the bathroom. And so some people got that year's budget and some people did not. And that's illegal now because the SEC passed something called Reg FD, fair dealing. And if you think about it, the goal of the SEC is to make sure that everybody has the same information at the same time. So that information can't hold the key to superiority. If you think about the efficient market hypothesis, which says that there are so many thousands of people who are intelligent, numerate, computerized, highly motivated. Can't be the answer. So in order to be a superior investor, and by the way, being a competent investor cannot be the goal. It has to be a superior investor, because only by beating the indices or the passive benchmarks can you distinguish yourself and justify a high fee. So if you want to be superior as an investor, readily available quantitative information about the present cannot hold the key. The key has to lie in either doing a superior job of intuiting the important inferences from that data, or doing a superior job of judging qualitative factors, like the quality of a company's management or the quality of its new product pipeline, or judging the future in the absence of analysis. So my question is, can a computer do those things? And I hope and think not. And the way I say it in this memo, in Investing Without People, is, can a computer sit down with 5 business plans from Steve Kaplan's class and figure out which one is Amazon? I think not. Can a computer sit down with 5 CEOs or their resumes and figure out which one is Steve Jobs? I think not. So I think there's still scope for individual decision making. Now, very few people can figure out which one is Amazon, and very few people can figure out which one is Steve Jobs. But hopefully there will be scope for the best investors to add value and make a living.